I'm going to go over today one of the highest probability setups you guys can possibly ever trade and find in the markets, and this works across every single asset that I have currently traded before. So let's get straight into the setup. Well, first off, you gotta really know in terms of trading, there's always going to be a left trend on the very far left, and there's going to be a trend on the right. Now, when do you know which trend to trade with, right? This does indeed matter. Sometimes looking to the left too much is very bad. Now, you may ask, how do you know when to look to the left, when to look to the right trend? Well, first of all, when I'm talking about the right trend must be swing structure. It must be internal swing structure, something like this, right? It has to be solid size ranges, something like this, along this line. It cannot be very small delivery in a very small range. So, for example, something like this. Let's see if I can find a better example here, actually. Let's see. Keep going to the left here. We'll find something like this, right? Like this is not considered internal swing structure to me. On the right, this here is following this one delivery to the downside, right? While if you look at the right trend now, this is much bigger trends. These are swing points now on the right trend. So this is what I deem as my right trend. This is what I deem as my left trend. Okay, and then when you see something like this, where it's just one delivery or one movement like this is not going to be considered your right trend here. All right. This is internal structure here. If you want to talk about right trend, we're talking about all of this here as your right trend. So that is going to be what right trend will be really primarily focused around and centered in. Anyway, let's go over this trade recap on this day, how I was able to make 5 risk rewards. So if we go in replay mode here real quick, let's see, let's pull this down real quick. All right, we're in replay mode now here. And let's go back to where before I basically got my entry here. So 80 session kill zone was here. I believe I missed out on this, unfortunatately. There were a lot of great setups. Don't get it wrong. There's a good setup here off this mitigation. There's a nice setup here taking out inducement. There might have been something unmitigated here. Otherwise, this is all fully mitigated. Might have not missed that. Might have missed that move there, but you would have still been able to catch this very nice continuation to the downside here. But anyway, let's go over my trade and why I was looking for this low to get taken. Because if you look to the higher time frame, let's go to the 5 minute, for example, you can clearly see, we are on the left trend, very bullish. We also have what? A massive gap on the left to fill. And I believe this zone here I marked out was a higher time frame POY. There's the 1 hour marked out with the line here. And that big box might have been the 4 hour. But point is, the left trend is bullish. So keep that in mind. So I am trying to long at demand. However, remember, you got to make sure that your demand that you're marking out has a PY. If there is no PY at that demand, you're not supposed to be long in there. So what do I see here? Well, look to the left here on this demand. If we draw our trend on the right, high, low, and this low failed to make a new high, which is okay, but we took out this low. Now, I'm looking for okay, do we have any demand here? Well, switch time frames, 30 minute, 1 hour. You see there's nothing here to be seen, okay? Usually the higher time frame you go, the less PYs you will see, because that's just how how price moves, In order for us to have a PY that's unmitigated on the 1 hour, you need 3 hours of price action, 3 candles. For a PY to be unmitigated on the 5 minute, you need 15 minutes of price action, 3 5-minute candles. Now you guys are seeing where I'm getting to. So you see how this 5 minute PY already got mitigated. So please, I see some of you guys extending your PYs like this. Please do not extend your PYs. It doesn't make sense. That's not how trading works. You don't extend it all the way. Once it gets hit, it gets hit. This PY is done for. So, for example, mark this as 5 minute. That PY is done for. Now we look for a fresh, new, unmitigated PY. This is why I drew this arrow here. You can zoom in as much as you want, but look, everything here is fully mitigated. There is no unmitigated PY. Now, if you are new to the channel and you don't know what is considered an unmitigated PY, make sure to check out the 100 risk course down below, and I'll go over exactly how to mechanically identify something that's unmitigated. Or you can also get the ETU lead indicator, also available on my website, with either monthly, yearly, or a one-time lifetime payment. And this auto marks out all this stuff: daily buys, IFG, POIs, structured and drawn liquidity, kill zones. It does everything for you that I do manually. So you can see this would be, for example, a PY, but this is already mitigated, okay? This would be your OB, that's already mitigated. OB stands for order block for those that are new. I do have a beginner's guide on my channel. If you're completely new to trading and you find this too complicated right now, I would recommend you finish the beginner's bootcamp. I have a beginner's course and a bootcamp. So check those two things out before watching the further advanced content. But if you know how to read candlesticks, you know what PYs, OBs, origins, and flips are, continue to watch the rest of this video. Point is, this is when my high quality setups come to play. When everything is fully mitigated, there's nothing else for price to, in a sense, mitigate aside from the external low, because the external low is considered a liquidity sweep. This low broke this high, okay? So this is your liquidity sweep. Now, you could argue here that this low here made a new high here. So you could even argue saying that because we broke this low, that's supposed to hold here because it's a liquidity sweep, we reset liquidity. Usually in price, we tend to not sweep twice. If you see us sweeping price as liquidity twice, that is a red flag to me. If you're trying to trade with the trend, like we usually don't sweep like this twice. If we do it twice, this is likely going to turn into a break structure to the downside, and this then becomes your change of character to the downside. Again, you won't know this confirmed until this low gets taken. Now, if this low gets taken, but you do see something unmitigated, I'll be looking for longs here, no problem. However, because this is fully mitigated, you'll be looking for shorts. Does this make sense? All right, if this makes sense, let's keep moving. Now, where's my entry here? I saw we have a decent basic impulse delivery here. So you could have taken the impulse model here if you want to. Going up here, this is an impulsive move here, going up. But I believe at the time I just set a limit order, and what did I cover? I did cover 2 OBs or 2 PYs, both of these. So I have my stop loss right above because technically there are 2 here. I cannot predict exactly if it will just cover this one or go for the OB above. I don't know, right? So that's why I just covered both here, both PYs here for about a 6.87 risk reward trade. And you can even wait for a confirmation. I believe you might have gotten a confirmation here. There's an IFG, but this IFG is not valid to me. It has to be an extreme in the internal leg. So you would have had a really bad entry that I would not have taken down here. So yeah, either use impulse model, which is here. You can still get a very nice risk reward here. Or use a limit order because, again, this is a quite small range. Okay, only 13 candles. If you know, you know. And then where's my target? Very clearly the low here because there's nothing else, like I said, unmitigated here. Price has to go to this low. So there it is. And look, if you can understand mitigation, you can avoid taking losses like these. Like there's no reason to be long in here, even though you have an entry model. Why? Because there's no PY. You cannot take a trade unless there's a PY that gets hit that's valid. There's nothing here. So there's no question to even try taking a trade here. So that's my target here, and I got 7 risk reward out of that trade. Now, if you miss this short here, there's an amazing stop under setup here. This high is a bullish candle here. Okay, now obviously you're not going to use this high here because this high already got taken. So you're going to be using the clearest high closest to the bullish candle pullback. Boom. This is your internal sweep. And your entry would be on this candle closure, cover the high there, or cover the candle wick if you want, up to you, and target the low, and you get about 2.6 to 3 risk reward depending on how further you target past this low. So now let's go over to my 2 losses because you guys know I don't only take wins, I also take losses just like everyone else. So my first loss here was actually off this liquidity sweep. I was anticipating here that, you know, we had 3 breaks, actually more than 3 breaks to downside, but point really is I was seeing this low as the one that made this major structural high shift here. I didn't really see this before, to be honest. I was really looking at bigger swing movements. So this break was much bigger than this tiny break here. So I was seeing price to basically take out this liquidity and then continue higher because we do have, like I said, a massive gap on the left. So that was my initial trade idea. However, one thing I also need to factor in the future is also time theory. We've created this new trend on the right side that has a lot of new swing structure. Okay, this right trend here is not the same as this trend here. This is internal structure here. And then you can see this is internal swing structure here. You see the difference here? It's a very big difference. This is internal structure here, guys. This is internal swing structure. Okay, so when I talk about right trend, I'm talking about internal swing structure. Internal structure here is almost always going to be counter. You're almost always going to be countering because I'm trying to trade reversals here, unless you wait for something to shift like the market like this. Boom, this high made a new low, so you can wait for that to break and then wait for your entry model. But sometimes you do miss out on the move, and I'm not a big fan of that. So once you did a sweep, I did try to look for entry model immediately and I got stopped out. Now, granted, a better option here, since we have a big range, would be waiting for that internal shift. So in this internal structure to shift bullish, breaking above highs, maybe 2 breaks even. I did take another OB entry model here right after. A little bit of drawdown here, but no problem here. And my target was the high for a pre-stay high, I believe. That was my target there for pre-stay high. And we did go in and profit a good amount. Like you see, we went in profit to mitigate this PY here, this origin here above. Went forward toward, my original target was almost 10, so almost double. But eventually it did stop me out here, unfortunately. So at this point in time, it was like, okay, it is already 3 a.m. I'm about to go to sleep anyway, so not going to be really looking for any other trades here, to be honest, because my trend is just wrong here at this point. Now I have to accept defeat that we have a new trend on the right, and I should be following this new trend on the right to go to the downside. Because this last failure point was a key indication here, right? We had some early indications of failures here, not holding this sweep low, but we ultimately failed this sweep low that should have held for price to go higher, especially we have such a good clear draw on liquidity. But look, price is telling me a new story here that, okay, this sweep failed twice, okay? We swapped this and we had SMT here. I forgot to even mention that. ES did not take out this low. I believe it made equal lows at the time. So this setup just completely failed. Now, if I was to, keep it conservative and trade with the trend on the right, I would have made so much money, right? Forward, there's a nice short here. What time is this? 2:52. Kind of weird candle, to be honest, at 2:52. If this was an open, it makes sense. Kind of weird. You would have got stopped out, and you would have to look for like a re-entry somewhere here. But again, point is, I would have made so much more money trading with the right trend here. But understanding time theory in combination with a clear draw on liquidity, I'm able to mitigate my 2 losses here by taking this continuation, following the right trend. So that's how you can mitigate your potential losses if you are wrong in direction. Hope you guys do enjoy today's video. Again, I'll be recording the other trade recaps, going over the other trades I've taken. I'm kind of behind a little bit on the trade recaps. Sorry about that in advance. But yeah, I'll see you guys in the next video. Peace.